Good morning, everybody. Welcome back to the Schwab YouTube coaching channel for our Wednesday edition of Trader Talk in today's market. I'm your host, Kevin Horner, joining you from a rainy, again, Denver, Colorado. Very pleased to be joined by my friend and fellow Schwab coach, Rachel Deshelle, this morning. Good morning, Rachel. It's good to see you again. How are you?
Good morning, Kev. It's great to see you as well. Great to join you. It's definitely been a while that I've been on here with you.
Yeah, normally I get you on Mondays, of course, about once a month, but we're getting you midweek. We've got a big day today, as it turns out. You know, the market's been a little bit of a breather the last few sessions here. We've noticed a retreat in some of those bigger name positions, and then maybe some support having been found in some of those positions heading into this afternoon's NVIDIA report, which we will talk about a little bit today as well. So, as always, plenty of charts to get to. Rachel and I love getting to as many charts as we can for all of you. So thanks for being here this morning, everyone. All right, in the chat today, we are joined by fellow coach Barb Armstrong. Please say hey to Barb there. She, of course, a fantastic coach, a former attendee and viewer of all of these classes, graduating to coach status. Barb will be able to get to many of your comments and questions as necessary. Rachel and I, of course, are going to eyeball the chat as well, try to bring those questions and comments to our discussion too, but please feel free to post in there for the duration of the show. Remember to follow the three of us on X as well. Kevin Horner CS, Rachel Dash CS, and Barb Armstrong CS. One of the great places you can find us when we're not hosting classes for you here, but don't forget, the three of us are also on LinkedIn, and we try to post there periodically as well. So follow us wherever you can. Now, with that, let's get to our disclosures before we get to the chart. So first of all, remember, everything we cover for you is informational and educational only. We do not make recommendations. We do not endorse any specific approach to trading the market here. What we will do is incorporate technical analysis as we review the areas of the market with you all. Remember to think of technical analysis, of course, simply as one of your decision-making puzzle pieces, not the entirety of those puzzle pieces. So please try not to make decisions exclusively off what you get in the way of technical analysis. All right, as usual, we follow our traditional agenda here. If you're new, what this means is a top-down review of the broad markets. We start with indices, work our way through industry groups, as well as sectors on the move, and of course, stocks in the news this morning. And so, as always, a lot to get to for all of you. We lead with the S&P 500. Rachel, we've held up pretty well, all things considered. I mean, 3 days in a row of these red candles. We did close below the 10-day moving average yesterday for the first time since the April rally began. Are you taking that as a maybe a potential signal for what's going on here in the SPX?
Yeah, I mean, we have had an extended trend. So I think a lot of folks, a lot of market participants aren't really surprised that we are pulling back a little bit. But like you said, this is kind of the first time with this entire run over the last month and a half or so that we've actually closed below the 10-day moving average. So definitely a short-term change in the character of the trend. We're still holding that 20-day moving average here. And it looks like today we're having a little bit of an inside day, a little bit of a pause so far. But still, really the long-term trend, still kind of the short-term trend still kind of remains intact. I think the main thing here that folks may be watching is trying to just kind of reclaim this 10-day moving average really up ahead, right around 7,400 or so.
That would be a real nice development, wouldn't it? 2 days below, 1 day below the 10-day, 1 day back up above it would not be negative by any stretch. It does look, as Dave is pointing out, a little bull flag-ish, having seen a bit of a rally. If we go back to really when this move to the upside began, it was back here after the brief consolidation at the end of the month of April, and so we've really gone up pretty nicely from that spot. If you just go to the month of May alone, our move there was 5.5%, and now we've given back to the low yesterday about 2.5 of that. So, which all fits within proper pullbacks and standard detail. The question really, if you're watching the trend, I guess, is which of those moving averages matters to you traders. So some of you, the 10-day, you may have had a reason to pull a little bit off based on a close below the 10-day, but alternatively, if you're a 20-day trader, you've had a violation there, and so it seems that we're holding up pretty well, all things considered. So take your preferred moving average or your preferred level of support. The break below the 10-day is one thing, but don't forget we've also got that gap level right beneath us, happens to coincide perfectly with the 20-day moving average as well there, Rachel.
Yep, definitely a confluence there. I think another interesting thing here, Kev, if you draw a Fibonacci from February prior highs right around 7,000 down to the lows that we saw, you can actually see where where we've seen some profit taking, which is that 161.8% retracement level. So I think it kind of makes sense that there was a lot of supply at that level because typically when you don't have any resistance up ahead, this is kind of what traders use is some of these Fibonacci retracements as
Sure.
a way to say, hey, this is where I may take some of my chips off the table. This is where I may take some profit. And we saw that happen right above some of those levels. So I think right now, I think a lot of eyes will be right on that 20-day moving average. If we can hold that, we can see that the shorter term trend is really still intact here.
As always, what it means to us, I think, Rachel, is that we are constantly giving consideration to what may happen, what may be playing out, and by constantly considering and layering areas of potential support, what we find is that we're not surprised when we get there. And if we're not surprised when we get there, well, then we have likely a plan of action that we can follow when we get to those price levels. So we know how we're going to address them. Are we sellers at those levels? Are we buyers at those levels, etc.? That's the main thought process here. So be considerate, be constantly working to think where could the market go, and maybe more importantly, even though I think this area, whatever that area may be, this should be support, what if I'm wrong, right? What if it goes further than what I deem to be support? That way, if it does happen, again, we're prepared. We can be ready to act as necessary. All right, Rachel, I'm going to kick us over to the Nasdaq, but I cannot ignore this comment, so I'm going to mention it. So, John, I mentioned off the top that we've got Barb in the chat. What I said was that Barb graduated from being a viewer with us, meaning simply Barb got her start watching shows here, way back when, attending these learning sessions, and then decided, well, I could do that. She went ahead, got licensed, became a coach. All I'm suggesting is she took this path that is very different than many of us. And what I love about it, I love her story so much because she took something that she loved and turned it into another role for her. So I think it's an excellent example of how fantastic a coach Barb is. I certainly wouldn't be diminishing Barb's efforts here. She is a wonderful coach. So I just had to address that because I'm never going to downplay my friend Barb here. She's a wonderful coach and educator. Now with that, Rachel, the 20-day on the NDX here, seemingly just as important. Yesterday afternoon, in my building a stock portfolio class, I commented on the fact that we had a pretty good-sized doji here with yesterday's price action. Can we take anything from the doji?
Yeah, so with the doji, it's kind of one of those signals that gives you a little bit of pause, a little bit of indecision, typically signaling, hey, there may be a little bit of a hiccup in this downtrend. And so we've seen that leading up to that doji, we have had a little bit of a pullback. So the prior trend, just over the last couple days, has been down. So that doji kind of occurring at the kind of lows in that short-term trend here could have told us, hey, there may be a little bit of pause in the short-term trend, maybe even a little bit of a reversal here. And then today's candle, today's price action is going to be what confirms that specific candle or not. So if we can get a close above the high of yesterday, that would be further confirmation that hey, this could be a tradable low. This is a bounce from these levels, which could honestly give some bullish traders another look to possibly enter into this trend at a little bit of a pullback here.
So ultimately, possibility that we've got horizontal support, too early to suggest, perhaps. But the fact that we're above the 20-day is going to give NDX bulls here a bit more confidence. It's been a little bit more volatile. The gap level that we achieved here on the 6th is now below the 20-day, or the 20-day is now above that gap ledge, which is another area for potential support to be provided by the NDX here. We'll see if that comes into play as well. But as always, we monitor those gap levels because they can be quite important. It does seem like the NASDAQ, volatility-wise, is kind of ahead of the SPX. That's not really a surprise, though, I wouldn't think, Rach. It's pretty much kind of par for the course as it relates to the tech-heavy NASDAQ.
Yeah, exactly. And I think you're also seeing a little bit of rotation happening within tech as well. So I think that kind of speaks to kind of what we're seeing that's showing up on the index level too. I mean, you had some very extended trends in
Sure.
semiconductors, maybe seeing a little bit of rotation in software. So money's just kind of moving throughout the tech space too.
Well, then, you know what? Let's do that. Normally I roll through the sectors or in through the indices, but because the NDX is layered with both semiconductors and software, let's look at those briefly. Let's talk about the SOX, up 2.75% today. I've got a lot of drawings on here, everybody, but boy, it sure looks, at least at this point, like we have confirmed the 20-day on the semiconductor index and are ready to, the path of least resistance could very well be higher at this point.
That's what it looks like, Kev. We had that bounce, it looks like, and I mean, today we're having a little bit of we're having this really, really tight, small candle telling us that there could be a little bit of pause at this level, or maybe
Sure.
like a little bit of indecision. But right now, it's trading above the high of yesterday, which so far is giving us confirmation of a bounce. We'll kind of see what the close looks like getting into the end of the day today, but really a bounce off of the 20-day, which is something that we really haven't seen it trade below the 20-day for the last month and a half or so. Could
Yep.
give, like I said in the last chart, bulls another chance to kind of enter on a pullback of this trend.
Yeah, exactly that. In fact, the gap through the high yesterday is going to give bulls a little bit of confidence, and of course, we've got a big catalyst this afternoon that's going to drive semis the rest of the week. Likely drive the NDX as well. So, paying close attention there. The truth is, no matter what we get in the way of technical action here today, Rachel, it could all go up in a puff of smoke if things don't come out properly, according to the NVIDIA commentary. Not so much necessarily what has been done in the last quarter, Rachel, but maybe what Jensen has to say about the coming window of time.
Exactly. I think the future guidance and things like that will be something that most investors will kind of pay attention to. And I mean, even with NVIDIA, it has remained strong. It's typically, I think I heard a stat that it has pretty much beat the last, I mean, couple years of earnings announcements, or it's
Hmm.
beat its earnings estimates. So it's just it's always going to be how that the market's going to react to some of the future guidance and some of the commentary there versus just kind of the blanket results versus the estimates. So yeah, that will
Hmm.
definitely be interesting within the semiconductor space, since obviously NVIDIA has been a leader in that space for quite some time.
Absolutely. Now, Rachel, as we noted, the last 3 days or 4 days when semis were pulling back, the sold off group, the one that has been most under pressure in the last 6 months, has been software. And what we saw was some rotation into software from, well, I'm assuming from the semiconductors because they were so strong previously. So I'm watching a few levels here on software. We had a nice move, and it's really improved off of the lows from mid-April here. The sector itself, or the space itself, the industry group, of about 20% to highs achieved yesterday. But boy, midday, all of that rotation just ended. It was like we took profits on the rally. Granted, the semis went up 70% in 6 weeks, so it's not a shock to see some profit taking. But Rachel, it happened fast. Midday rotation out of semis, or excuse me, back into semis. That is in advance of today's report, perhaps.
Yeah, it's kind of interesting what we're seeing. I mean, you had this bottoming process occurring all this time in software. I mean, you can even see that with just the last few months, like earlier this spring when we had these bullish momentum divergences off the lows where we saw price constantly making lower lows. We saw the indicator like the RSI making a higher low. And then just for the past month or so, we've had this little bit of a consolidation here. We had that breakout yesterday of that consolidation and then it put it back in the box. So
Yeah.
I think right now there's a little bit of indecision, a little bit of a pause here at the 20-day moving average, but there still is a lot of improvement in this space. And I think if there is continued rotation within the tech space, this is definitely one of those groups that traders are paying attention to for additional repair.
And while it might be an under rotation give back at this moment, Rachel, would you agree that the chart looks vastly improving relative to what we saw from the late or early November, late October window to when we bottomed here in April? I mean, clearly, even though we're not working tremendously, it seems like we've got higher lows and higher highs in the short term here.
Yeah, definitely. And that's a character of the change in the trend. Just to
Yep.
keep it really simple. Yeah, anytime you see higher highs, higher lows, which is what we're seeing here, we had a breakout from that kind of double bottom looking formation where we're in a bullish momentum regime too that you kind of marked there with that 50 line.
Hmm.
You can see the entire way down where we had that major downtrend the last like previous 6 months or so. We were in this bearish momentum regime the entire time. Now we've been in a bullish momentum regime.
Yep.
So just kind of picking up some of this speed and sometimes bottoms are a process in this case. There's not always going to be a V bottom.
Great
Mean
comment.
reversion sometimes takes a little bit of time. Yeah, there's definitely improvement in this space, and I think that's pretty evident with the change in trend and the character of momentum too.
Yeah, I'm glad you spoke to the RSI as I drew that line in. It's a good reminder that a lot of us can keep an eye on RSI. Can act as resistance and support of the trend along the way, and then understanding the need for us as traders to make minor adjustments where appropriate to understanding bullish regime, bearish regime, what's considered oversold versus overbought when your group is trending bullishly versus bearishly. That 50 line becomes very important frequently. So this is really instructive. Okay, there's a look at basically the NASDAQ, the semis, and software. Now let's migrate back into index. Let's talk about the Russell. We know the Russell's been under pressure, largely due to the fact that we've had the 10-year rallying aggressively, the yields rallying aggressively, I should say. We're going to look at yields momentarily. But Rachel, that rectangle I've drawn in seems to be a pretty notable spot for a bounce.
Yeah, definitely. That was the one I was actually looking at as well. If you even take that rectangle all the way back to early January too, obviously that is a pretty crucial level that the Russell
Mm-hmm.
has shown of support. And I think what's interesting too is if you look at the lower wicks of those candles, the each time that price has tested that level, you can see that there's a long lower wick. So it just means that, hey, there's been a lot of buying pressure. There's been a lot of demand at that level that's pushed the price higher. And you can see that with that high wave candle that we even saw yesterday. So today it looks like I mean, the early start of a hold, possibly. So, possibly close above the high of the low day, which would give traders confirmation that, hey, this move may not be over in small caps. And if you kind of if you kind of look at that versus what's happening in rates and things like
Mm-hmm.
that, the fact that small caps are holding up here and seeing these levels of demand, it could maybe tell us that, hey, maybe rates, this breakout that we've seen is going to be a little bit more short-lived. That's kind of the interesting thing when you look at some of the cross asset groups and what could be happening here with small caps.
Yeah, let's talk about those yields because they are moving, but the other way now. Granted, the big thing is this action of the last 4 days, unfortunately. And Richard, we've Okay, so we've talked about this. I've brought this up a number of times, talking about the likely pressure that a move through 4.5, or on this chart, the 45 level. We just moved the decimal one spot here to get the actual yield. So we're yield on the 10-year is 4.65 right now, and the a move through this zone was the key development. And of course, that 4 days of upward momentum, or now I guess if we count today 4, 3 days of upward momentum, really led to that pressure on the Russell small cap position. So this is an important opportunity if we can get it to come back to earth, because Rachel, the Russell is really digested these upward moves broadly pretty well, and a pullback to an area of horizontal support in the midst of a big move in the 10-year is not terrible.
Yeah, I agree. They have digested it pretty well, and it's almost like to me, it's almost like small caps isn't believing this breakout in rates almost, because if those support levels are holding, if small caps are still holding up here, which obviously we know that small caps are one of the most sensitive groups to rates, because
Mm-hmm.
these smaller capitalization companies carry a lot more debt. And so if these levels in small caps are getting bought with a ton of pressure, you may kind of, one may kind of wonder how short-lived this move in rates is going to be. And I'll kind of say that just because rates, you can see the catapult that we've had with rates the
Yeah.
last week or so, and maybe rates are kind of at some of these extended levels. We can see they're reaching overbought levels in the RSI. So maybe it is time for rates to maybe pause here, take a little bit of a breather.
Maybe. I mean, obvious. I would say obviously, but ultimately, it would be a real positive if we could get these yields to come back. And a reminder of what happens with the 10-year yield. If yield is rising like we've seen, it's because we are seeing selling of U.S. Treasury notes, the 10-year in this case. So buyers willing to step in on the 10-year Treasury note and accumulate there would push yields back lower for us, and potentially be a signal of economic health. You know, if sovereigns are willing to come in and spend billions or millions or billions on U.S. debt, then that's a positive for us, broadly speaking. So it wouldn't be bad if we could see these yields pushed back a little bit. Okay, Rachel, we've got some other things we could check on. Of course, our futures and what have you. We want to take a peek on a few things that aren't breaking to one way or the other just yet, but are very notable. Do you want to hit up sectors real quick, or anything on the move, or do you want to look at our futures opportunities here?
Ooh, let's dive into the futures first, and then
Okay.
we can go to sectors. Because I think the one of the major things people are watching right now is this massive symmetrical triangle that's taking
Yeah.
place in oil.
Precisely one of the things I was talking about. Yes, not yet moving, but notable. Let's talk about this. First of all, I'm utilizing the future quote on the light sweet crude. This is for the July window. Now, we're not recommending futures trading. We're not encouraging futures trading. We're simply relying on the future symbol to get a gauge of what's happening with the price of oil. This is not the only symbol for oil out there. There are many ways to consider it, but this is one that gives us the clearest picture of potential risk, and risk on, risk off as it relates to our markets, Rachel. So speak to us a little bit about what you're seeing here.
Yeah, so we've seen that. I think one of the major things that traders have been looking at is that we've consistently held that 50-day moving average. So that 50-day, we kind of talked about some of the lower wicks in the small caps. You're seeing
Mm-hmm.
that here with the lower wicks every time that crude has found its way to the 50-day moving average. That level just gets bought very aggressively. So it's met with a lot of demand there. So that 50-day is something that is one of those trend indicators that is an indicator of a short-term and intermediate trend that has not let up in the slightest. And right now you're seeing really price getting coiled and compressed, which can really tell us that we may see a breakout in either direction. So a lot of times triangles could be continuation patterns, but when you're seeing symmetrical triangles like this, where you have the descending resistance line really coming in at the same speed or ascent as the support line there. You really could see this break in either way. And for crude, that would look like a pretty large measured move. And of course,
Mm.
patterns aren't guarantees, but if you just kind of take a look at the base of how large that triangle is, it, you could be looking at a massive move in really either direction with crude here.
So I'm going to do this as a straight line, Rachel. I think if I'm not mistaken, you might look at it kind of like this, right? We'd find the low since this peak, and this is an extended peak. We could work with it as well, I suppose. But ultimately, it's the height of the broadest point of the triangle, and then we take that line and we can activate it and move it one way or the other. And so if we're thinking about a breakout, a measured move might get you into the neighborhood of 140. If you're thinking about it possibly breaking down, well, then we've got a bigger move to the downside and really bullish. But, 55 is highly unlikely, perhaps, even though it's a measured move target. Remember, measured moves, these are just one way that we traders will look to get estimates of where price can go. By no means guaranteed to be achieved. Rachel, when you're doing it like this, though, it's a little bit of a heads up, and it tells us more than anything that it's all tied to headlines here, unfortunately, to a certain extent, right? I mean, I say all tied, but ultimately headlines will tell us what's happening in the short run. But what about the longer term here? I mean, I know that we've got this backwardation still as a significant scenario as it relates to oil. So traders are still positioned in an expectation of yields going, of oil going lower. Look at the November, you're looking at about what is that, about a 15% decrease? So,
Yeah.
expectations are for oil to go lower, but that doesn't mean it has to go that way, that's for sure.
No, definitely not. It doesn't necessarily have to go that way. And I think especially if there's continued geopolitical tensions and things like that, where we're not really getting through any of these deals with Iran and things like that, you could see these elevated oil prices for quite some time. And it's really it comes down to I know you mentioned like a headline driven type market, but ultimately when you're kind of looking at the price ultimately comes down to levels of supply and demand and investor positioning. So
Sure.
what are investors really positioning for oil for the next few months or the next few weeks and things like that? And I think, like I mentioned before, one of the most notable things is every time there has been that support retest of oil, you're seeing this influx of demand push price higher at some of those levels, especially at that 50-day. So I think even though we have had some of these supply shocks, there is these crucial levels of demand that price is still met with that's pushing it higher. So I think that is notable as well. And I know that crude oil and rates tend to move together as
Sure.
well. So really, it's going to be pretty determinant about what's going to happen with rates and small caps, really depending on like what happens with oil here, since it tends to be one of those major catalysts.
True. And from a technical basis, if you're trading the so-called triangle that we've drawn in, a lot of traders just kind of sit on their hands, Rach, until it breaks one way or the other. Take the position in the direction of the break. If it breaks out, they take bullish trades. If it breaks down, they take bearish trades as it relates to oil, at least. So we'll see how it goes from here. Still hasn't broken, though, according to the recent action, just getting tighter and tighter, but nearing an apex. So we'll certainly see something here in the near future, I would expect. I just can't tell you which way it's going to go. So we mentioned futures, so let's talk about a couple of other ones. I want to look at gold here briefly, and notice here, still not really moving. Now, Rachel, we've been below the 50-day for a while now, mid-March. This looks like we've got to find an area of support before it finds any foothold here. What about you?
Yeah, that's what I'm looking at as well. It's still just kind of a messy downtrend. We haven't really seen a ton of repair occurring. So kind of if we kind of compare it to like the software chart of where we saw there was a clear bottoming process, we saw a little bit of repair in the trend. This is really the reverse of that. So we're still seeing lower highs. maybe a little bit of a higher low here just from March's low, but still nothing super constructive, especially with kind of the price of gold here. And this could be more of like a rates dollar story too. As we see higher rates, we're seeing a little bit of a pullback in gold as well. So not really acting as an inflationary hedge, kind of actually
Yeah.
really separating its correlation from rates in that kind of sense there. So I think that's interesting.
And then in the similar vein is silver, which gave you the belief that, hey, maybe we've got a little something going here just a week ago, and that didn't hold either. So more of the same here. I mean, again, rallies being sold pretty effectively here.
Yeah, I do think the chart between silver and gold does look a little bit different, though. I think silver looks a little bit more constructive than gold, but obviously it's still making its way. It looks like it's finishing out its corrective wave. We saw that wave one kind of leading up into really the start of February, and then we had
Yeah.
this massive corrective wave that we've seen that retraced nearly 61.8% of that entire move that we saw up from the year prior. And so now we're just seeing a little bit of repair take place. I think what's interesting though is right now, today, we're seeing a little bit of a bullish harami. So we have that little inside day really occurring at the lows here. So that could be, if we do see follow through tomorrow, that could be a possible signal of a tradable low here in silver.
Yeah, that's a possibility as well. And then finally, Rachel, the other area I wanted to hit was an improving look at copper, which is always instructive because it reminds us of the importance of copper as a commercial and production metal, right? So one of the things I find interesting about this one is the technical aspect of this, which is really just a breakout. Let me move my little title here, but it looks to me like it's a breakout and throwback to the breakout for a test, and we have just done so as of today and yesterday.
Yeah, that's
Potentially, I should say.
it, literally classic retest, classic throwback from what we're seeing here. And yeah, copper's kind of one of those like that is kind of taken as the barometer of the US economy because it's that industrial metal. It has so
Hmm.
many different uses. And so you typically, when we do see copper breaking out, it is a healthy sign for the overall economy. What we don't want it to do is kind of fall back into this old head and shoulders pattern that we kind of saw, or inverse head and shoulders pattern. So as long as it holds support here, I think it would be constructive for folks to be still bullish on the overall economy here.
Yeah, that's a decent sign on the overall U.S. economic picture as it relates to copper specifically. So I wanted to make sure we touched on this one, especially just from the technical breakout viewpoint. I mean, whether you view it as a very deep cup coming back from the original high back here, or maybe a little bit of a cup like so here to the handle we've built right in here, all of which looks bullish to this particular technician. And the fact that we've broken out, tested, this is an area where some traders are going to get a little bit more comfort from the test of support, especially if it starts trading above the high of yesterday, if yesterday was in fact the low day in this brief pullback in the price of copper. So we'll keep an eye on that one moving forward as well. Rachel, what about sectors? Should we do a little rotation look here? We've got that preferred sector relationship chart, the relative strength chart. Why don't I bring that up and we can speak to this a little bit. So, Rach, this is one that you've built for us in the past, but explain this for our viewers. What are we looking at here?
Yeah, so and this is kind of a nice look because it gives you a view of where you're seeing rotation in the market. Because relative strength is essentially going to take one asset compared to a benchmark. So here we're taking the various sectors compared to the S&P 500 as a benchmark. And so if the line is going up, it's showing you that there is a rotation or relative strength or outperformance in that sector versus the overall market and vice versa. If you have that downtrend, you're seeing likely rotation out of that sector. You're likely seeing underperformance for the overall market. And I think what's interesting here is really one of the only sectors that is consistently making new highs here is technology.
Yep.
And I think that definitely speaks to the narrow leadership that we're seeing here, where pretty much all the leadership that we're seeing in the market right now, all the alpha that's being created, is really occurring in the technology space because you're seeing a lot of these other groups like utilities, real estate, financials, healthcare, industrials, materials, discretionary. I mean, they're all hitting some of these multi-month lows, and so I think it's speaks to kind of the breadth as well from what we're seeing just with the strength, prevailing strength in technology. But it is carrying the indexes higher given the weight. So
Yeah, so you can't ignore it really, right? I think that's the good reminder here. We like to look at it for an understanding of the true relationship and movement here. Now, you guys all requested this. A few of you would like to see this grid, so I will happily share this with you all. Just a reminder that grids we share like this or other scripts, these aren't guaranteed for timing or for accuracy. If you're catching this in the replay, you can find this grid available to you in the show notes as well. Rachel, let's take a look at some of these sectors on the move today. I wanted to go back to our standard quote. So we just look at the sectors, the 11 of them, take a peek at them maybe on a 5-day basis, and noticing that we've got energy and staples and healthcare in the lead. It has changed on the today basis and late yesterday, but again, still defensive in nature over the last week plus.
yeah, that's kind of the interesting thing. Like, despite the strength that we've seen, we're seeing some short-term bearish rotation. Obviously, it's not showing up in our longer-term charts yet, but the fact that energy, consumer staples, and healthcare are all pretty defensive type sectors, those are showing short-term leadership. It could be telling us that hey, there is this correction that's occurring underneath the surface, and money managers are getting a little bit bearish here, kind of leading up into maybe some of these major announcements, whether it's earnings or whether it's what's kind of going on with the war and rates and things like
Mm-hmm.
that. So I definitely think that's notable, and especially what's happening in energy too. So what are you seeing, Kev?
Yeah, well, energy moving higher obviously kind of stands out. Of course, we can't be too surprised by that. The level of the bounce is also notable, Rachel. We talked about this when it happened, but this move here, this line is this level is the 50% retracement of the move, basically on a year-to-date basis. So if I put in the Fibonacci line from the low on the date of the 2nd of January to the peak we achieved here in late March, you'll see we did a 50% test, closed above it, and back to highs, essentially short-term highs. Now, at this point, the path of least resistance is to the upside on energy. I think that bears watching, but it does not, we cannot infer from this chart that oil has to go higher. But I know that that's going to be a tendency of traders to kind of feel that way. But energy has been outperforming everything else on a year-to-date basis, up 35%. It's certainly the leader year-to-date. And, we've seen some of that rotational money. But again, the reminder, I think, Rachel, is that when we take money, or these institutional investors are taking money from the winning trades and moving into other areas, they're not pulling that money from the market. They're not putting it into cash alternatives. So it's staying invested. They're just going to other areas of the market. That's still not a bearish piece of sentiment necessarily.
Exactly. Yeah, and that's kind of the story of sector rotation. And I think maybe a lot of retail investors don't necessarily realize that to the fullest extent, because as retail investors, we have the power to go to 100% cash if we want, but a lot of these fund managers of long only funds only can go to like 5% cash. So they have to find areas of the market to rotate to. And so
Hmm.
when we obviously have maybe higher oil prices or higher interest rates, or kind of maybe hesitations about the economy, they're kind of going to some of these more defensive sectors that could produce still uh, good returns within given the current environment. So.
One other area I wanted to hit briefly here was going to be the Staples space here. And let me take a look if I got that run right. Nope, that's communications. So right here. So Staples is pulling back today. Now, I noted this on X just yesterday, having broken through an area of former resistance, now potential support, which could be happening. But we heard from a couple of companies that I thought we should look at too. So first of all, we had Target earnings. Target's been on a bit of a repair situation here year to date, Rachel. This thing's been moving to the upside quite nicely over the last 6 months. You've seen a big move from 85-ish all the way up over 130. So they posted earnings and revenue that beat expectations. Net sales grew more than 6% year over year, trying to win back customers amid their slump in sales. Same store sales jumping 5.5%. So the Target announced basically stated that even though they've shown progress here, they know that they've got a lot of work to do still in the move here. Rachel, what are you seeing on this chart? I mean, the move today, not so inspiring given a good report, but getting beaten back below the 50-day moving average pretty aggressively here this morning.
Yeah, it does look like it's definitely like a change of the kind of slope of the trend, I would say. But right now it's still holding on to that horizontal support. So I don't think many investors or traders are necessarily maybe necessarily, I guess, cutting a lot of those positions quite yet. Maybe when we do see a close below that horizontal level of support, maybe around like 115 or so, that's where you may see a little bit more downside pressure. But as far as right now, it's just kind of really testing some of those levels.
Yeah, exactly. And when I was looking to see if I had any details following that report, but I didn't see a downgrade or an upgrade on Target. So the stock's reaction to the positive earnings could very well just be a little bit of profit taking. But the technical condition was a little ripe for profit taking. Unfortunately, bearish divergence with the RSI, the most recent bounce on that beautiful candle, obviously not sticking today. Maybe there's some horizontal support. Maybe the 100-day moving average
Oh
confluence
yeah.
can give it for Target here. The other one was Lowe's. Lowe's reported as well. Let me put my standard moving averages back in there. Again, it tried to get a bounce yesterday and it just didn't happen. This was not a great looking chart. Their quarterly results beat expectations, top and bottom line. They reaffirmed full year outlook, and the shares are certainly lower. Earnings came in better than expected, revenue better than expected. But again, Rachel, price action is telling us something here.
Yeah, it definitely is. But what's interesting to me is so it's hitting these new yearly lows, it looks like, but there is a little bit of a bullish divergence in momentum. So you see that a lower low has been made from the March low, but you're actually seeing a higher low in momentum here. And what may be interesting, and this is kind of what I'm wondering about, I wonder if other traders are kind of thinking the same thing, is when I think about like being a home buyer versus home improvement, if we're going to have these higher rates that are going to stay up here, you may have
Mm-hmm.
folks kind of staying in their homes longer and wanting to do more improvement. So you're kind of wondering if there may be a mean reversion type trade that would exist in Lowe's, given that we may have higher rates here. So maybe that's kind of why you're seeing a little bit of a bullish divergence in the
Interesting.
momentum, maybe a little bit of a bottoming or mean reversion coming up. Obviously, can't be too predictive, but just kind of some questions of wondering, hey, what could be the scenario, and how could that impact lows?
That's a really good point, Rachel. You're right. As a homeowner, one of the things I'm not looking to do is move and get out of a good rated mortgage for a higher rated mortgage. And yet price is maybe telling us a little bit of something. So interesting, as a trader, we always pay attention to price because we believe that what happens in the way of price knows everything as it relates to the stock, right? We know everything about interest rates, we know about the housing market and the potential for investors to rely on upgrading and updating their properties as opposed to buying new properties. This is an interesting spot, if nothing else. Horizontal support is pretty obvious here, dating back to the fall of 23. So you're looking at about a 2.5-year support line. The question becomes, does this maintain and hold up? We're going to have to wait and see. Now, everybody, we did get a survey opportunity in the chat. I should have mentioned this a lot sooner. I apologize, but we would love to hear from you. You know, Rachel comes to this class with a ton of great insight and information. We would really appreciate your comments and your scores. If you could take a quick moment to provide those for us, we would greatly appreciate it. Rachel, fantastic discussion today. So glad to have you back with me. Thanks for being here, and thanks for sharing your thoughts with our viewers.
Thanks for having me, Kev. Always fun to join you, and thanks everyone for watching.
Absolutely. And a huge thank to Barb, of course. Barb does a wonderful job in the chat, kept you all in line. Barb, thank you so much. Please follow the three of us on X and on LinkedIn. And if you liked the conversation today, you can hit that thumbs up button for us below. That helps us out on the replay. We get this reviewed and archived and available ASAP. And with that, we'll wish you all a great rest of your Wednesday and look forward to following up with you again real soon.